What's up, everybody? My name is Demetri and you're listening to Hidden Forces, a podcast that inspires investors, entrepreneurs, and everyday citizens to challenge consensus narratives and to learn how to think critically about the systems of power shaping our world. My guest in this week's episode is Spencer Jakab, an award-winning financial journalist who edits the Wall Street Journal's Heard on the Street column, and who is out with a new book this week on one of the craziest stories of the last few years. It's about a motley crew of retail traders on Reddit's Wall Street Bets forum who seemingly did the impossible. They used social media and a sophisticated understanding of options trading to bring some of the biggest players on Wall Street to their knees, realizing personal gains of, in some instances, tens of millions of dollars. Of course, I'm talking about GameStop, the video game retailer who attracted crazy amounts of media attention this time last year for its meteoric price rise in the stock market and everything that went into it. Spencer and I discussed that story in detail, how the meme stock squeeze unfolded, who the winners were, and what the deeper significance of this story really is. What does it reveal to us about how our financial system works, the corrosive influence of years and years of easy money, the dereliction of regulators to regulate, and the metanarrative that's taken hold in society today, which is that it's all just a narrative. And if that's true, what does that say about not only where the markets are going, but our economy and society as well? Today's episode was made available to premium subscribers last week. So if you want that type of early access to episodes or to the entire episode, only part of which is usually available on the public feed, head over to hiddenforces.io and become a premium subscriber today, where you can also access all of our episode transcripts and the all-new intelligence reports, which are the cliff notes of the Hidden Forces podcast, formatted for easy reading of episode highlights with answers to key questions, quotes from reference material, and links to all relevant information, books, articles, etc., used by me to prepare for each and every conversation. And with that, please enjoy this engaging conversation with my guest, Spencer Jakab. Spencer Jakab, welcome to Hidden Forces.
Thanks for having me.
Congratulations on the publication of your new book. It'll be out the day after this episode publishes. How do you feel?
Wow. So this book was written fairly quickly. I don't think that the quality suffered for it, but I began writing it on January 25th, 2021. So really just a year before the book came out, as the events began. Literally a few hours before the first articles began to appear about this crazy GameStop mania. And I think that I didn't have a single day that I wasn't using every spare hour to write the book for several months thereafter. I just completely buried myself in it. And so now, I don't know, I never given birth to a child, so I kind of feel like a little bad making this comparison, but it's a little bit like having a baby writing a book, right? Because you want to show it to everybody. Everyone's polite, not everybody's interested, but everybody's polite about it. And it's difficult to tell whether they're really interested or not. And you feel exhausted. You feel like you'll never do it again because it's been this grueling experience. And then you eventually do, because people write second and third and fourth books, right? So it's a weird analogy, but I think it's a fitting one now almost at the end of the process.
Well, it's surprising to hear that anyone would not be interested in this book, because the subject is just something that impacted everybody. There's something in it for everyone, It's got all the elements of a good story. The name of the book is The Revolution That Wasn't: GameStop, Reddit, and the Fleecing of Small Investors. We'll get into why you think it wasn't a revolution. But before we get into the book and into the conversation about GameStop and the larger phenomenon of meme stocks and stonks and all of that, I'd love for you to tell me how you got into financial journalism in the first place, because you didn't start as a journalist, right?
I did not, no. So I've been in finance for almost 30 years now. The first third of that I spent working in finance, and the last 2/3 writing about finance. And I didn't know anything about it. My parents were refugees. They didn't know anybody who worked in Wall Street. My father, though, happened to be kind of bitten by the bug, the Wall Street bug. So I remember he carried a copy of the Wall Street Journal and Barron's, and he wasn't exactly like one of these people who I write about in the book. I mean, he was always trying to outsmart Wall Street. And he was a very smart man. And he died when I was a teenager, but, always had some bright idea, but kind of wound up not really making too much money himself, and then, paying a lot to Wall Street. And, just kind of was almost always there. And he tried to get me interested when I was a kid, and I just didn't get it. I didn't really see what the appeal was. And it wasn't until I was in college, and then especially in graduate school, and I read a few books that really influenced me, that got me very interested in, not in making a bundle on the stock market, but just in finance, because finance is fascinating. Finance is this 24/7 battle between the smartest people in the world, and the points are right there for everybody to see in money, and they're trying to outsmart one another, and there are all kinds of setbacks. And the story that I tell, you have somebody who's it's like the equivalent of like some weekend golfer beating Tiger Woods, once. All right. I mean, that's the kind of thing that happened, and then thinking he could do it 100 more times. And so it wasn't until I was in graduate school, though, that I really, really got interested. And I was going to do a PhD in history. I was always sort of more into writing and reading and things like that. I got an application to this program at Columbia, kind of literally by accident. This is before the internet. And my undergraduate advisor told me I should definitely check it out. She had done the program. It was more of a professional program, and I met a kid there. He's a kid. He's now a 56-year-old kid. We're still friends, and he had been an investment banker before that. And I'd heard the word, but I really had no idea what that meant. So I just naively, asked him, and he told me about it, and it was kind of fascinating. And he told me how much he had been paid to be an investment banker, knowing nothing. And I was like, wow, really? How do I do that? And he told me to take all the finance classes and all the accounting classes that I could at Columbia Business School. I was in a different program at Columbia, and I did. They let me do it. So I took like 6 classes a semester, and I just got bitten by the bug. I thought it was fascinating. And I wound up getting a job as an investment banker myself, and did that for a number of years. And it was interesting for a while. And then it just became, I was very successful at it. I was the youngest managing director in my bank's equities department ever, and was managing a bunch of people at a pretty young age. And it was all just managing people and meeting clients and calling people on the phone. And it wasn't fun anymore. And, I felt like I kind of had made enough money that I was secure, and I really wanted to just write about it. And so I quit and became a financial journalist, which I've been doing for 20 years now.
Very cool. Well, I'm very excited, Spencer, to talk about your book, because like everyone, that's actually an interesting thing to contemplate, which is how many people experience this story from one angle or another, because it touched so many people. It had this populist vein during a time in which populism politically was really kind of at the forefront of people's minds. It was also during the pandemic, and people had more time to pay attention to different media stories and also to be online. And there's a huge online component. There's also a huge generational component to the story. When did you first begin to notice or think about the phenomenon that became Wall Street Bets and that you write about in the book?
So it was about a year before the events take place, the most dramatic events take place in the book. I was sitting at the Wall Street Journal. And I remember distinctly, it was pre-pandemic, months before the pandemic. And, we'd see some stock go up 100% or whatever, and look at the news, and we'd wanted to see what was all about. And I edit the Heard on the Street column, which is the financial analysis and opinion column at the Journal. And they're like, oh, they talked about it on Wall Street Bets. They ramped it up on Wall Street Bets. And we all thought that it was funny. It didn't even rise to the level of us writing about it. I think we have this kind of tongue-in-cheek thing we call the overheard. I write about half of them. We run one a week where it's like some funny business vignette. And I think Wall Street Bets maybe once or twice rose to the level of being written about there, where like they would ramp up, like Elon Musk or something would mention a company, and then there was some company that sounded like that company, and it would be up 1,000%, by mistake, because the ticker symbol is similar. It wasn't even a public company, but people on Wall Street Bets kind of piled in. So it was kind of funny, and we didn't take it particularly seriously. And I'm not the only person who should have, because there are a lot of people on Wall Street who are out billions of dollars now who should have taken it more seriously. And so it was about a year before. And then the one day that kind of the scales fell from my eyes, and I saw that it was going to be a huge thing.
Well, walk me through that. What was that? How did you come to that realization?
Well, it was the morning of January 25th, 2021, and I was at home, and I have three boys. My oldest boy was a college senior at the time. He is now in the working world. This was, a year later now. He was home because of COVID, and a friend of his was a kid who I've known since he was, like kindergarten, I guess, had bought GameStop stock. I didn't, I usually don't talk to his friends about stocks they buy. And he said, "Dad, are you going to write something about GameStop?" And I was like, "No, why would I do that?" So I check out the stock ticker. I see it's way, way, way up over the last few days. And so I'm looking for the news and I don't see any. There was some news several days earlier. And I see that they were talking about it on Wall Street Bets. But then as I began to read the forum, what I saw shocked me, which was that it wasn't just that they're all piling into the stock like they had done so many times before. It was that there was a whole long thread. There was a tremendous amount on there about GameStop. And there clearly were some sophisticated people on the board who kind of spelled out to them, look, the short interest in this stock, and I will explain later for anybody who's baffled by that term. I don't want to baffle anybody, but the short interest in this stock is excessive. Therefore, the hedge funds have laid a trap for themselves, and this is how we can ambush them. And they were in the process of ambushing some of the biggest, most sophisticated hedge funds on Wall Street. There's a bunch of guys with like a little bit of money, and they were doing the exact right thing to trap them. And it's the kind of thing that you cannot do legally anymore if you're an investment fund. You haven't been able to do it for a century, which is to ambush somebody and then force them into a corner or a short squeeze in a stock. That's manipulative. Like investment funds will get investigated by the SEC for doing it because they would be doing it in secret anyway, right? But here is this instance where it's totally out in the open. You have hundreds of thousands of people, eventually millions of people doing it. And after the fact, you could say that it wasn't totally kosher in terms of securities law. Who cares? You're not going to be able to go after these people. And they had just basically exposed a major gap in the armor of these really sophisticated hedge funds that are in the business of not having any gaps in their armor. And they were going to blow these guys up. I mean, this one fund, by the time I looked at it, had already lost billions of dollars. It would lose $6 billion by the next day, which is crazy. And so I saw it was going to be a story. I had a 3/4 written book proposal just sitting on my computer that I scrapped immediately. And I just wrote an email 10 minutes later to an editor at Penguin Random House, who, thank goodness, answered my email right away. And she hadn't heard about it either. There were no articles about this yet. And she said, "That's interesting. Do you have a proposal?" I'm like, "No, this is going on right now. This is playing out in the next few days. And it's going to be a really big story." And then by the time we spoke, it was the only story. There were over 1,000 articles over the course of a week, just in English, published about, different aspects of this phenomenon. It was like every late night talk show host was talking about it. Politicians left and right were talking about it. It was a subject of fascination. So yeah, I went from kind of thinking about it as a big joke to thinking about it as one of the weirdest things that I've ever seen in finance. And there's a lot more than just it being a weird story. First of all, it continues to this day. There are echoes of what happened, but it tells you a lot about American society, about generations, about finance. So there are a lot of layers to this and I think understanding this story helped me to understand a lot of things about social media, about intergenerational strife, about class resentment, about Silicon Valley, good and bad, and especially a lot of bad things about Silicon Valley that I'd never really thought about before. And that's all there in the book.
Man, you are right in our sweet spot right now. I love everything you just said. So let's try and pick this story apart in a way that I think can be most helpful for listeners. First of all, just one question. What was it like being so early to this story and being on the forums, being on the subreddit Wall Street Bets, following what was happening in real time? What was that experience like for you? And do you feel like it gave you an edge over your colleagues and the rest of Wall Street who was late to the story?
Okay, it did. I'm going to take a step back, though, and I have to be modest here because a lot of people dove in around that time, and there were even a few people who already they were trying to convince their editors. They were looking at this forum and trying to get things published. And there were a lot of smart people at the Wall Street Journal, especially a lot of my colleagues who then dove in. We were the first people to find and interview one of the pivotal characters in this, who was a pseudonymous at the time, Deep Effing Value, aka
Sure, Keith
Roaring
Gill.
Kitty, Keith Gill. And so they all dove in and did great work too. But it was amazing. It took everybody, I think, a few days to really wrap their heads around it, if that makes sense. Because I think, they say about journalists that like we write the first draft of history. And that gets to the title of the book, because if you just read the articles that came out in the next 3, 4, 5, 6 days, it makes it sound like it's that Wall Street got a black eye. I wasn't writing articles. I was just editing articles about it. And to our credit, my team were a lot more skeptical. But most of the articles at the time, not that they were wrong in terms of the facts, but everyone was just so amazed, anybody who writes about finance, that they just couldn't believe, what was going on. And they portrayed it as Wall Street having been given a black eye. And when you stop and think about it, and especially some data that came out, many days later, and you look at it, you could see that that wasn't the case. And maybe it's like a less fun narrative, but it's a more interesting narrative, which is that, these guys made a great contribution financially to Wall Street, basically, over the course of this entire episode. And the episode doesn't begin on January 25th. It begins late 2019. Then it picks up steam with the pandemic. And then this is kind of the crescendo of the whole thing.
Walk me through all of that. First of all, I also want those who aren't familiar with Reddit or Wall Street Bets or some of the characters in the story, et cetera, I want to give them, and you mentioned short interest also, options contracts played a huge role in this story. And in fact, I think that's one of the things that was so unique, and I wonder if not unprecedented, which is that you had retail investors using what are effectively, by the standards of most people, complex derivatives. I mean, obviously there are many more types of complex derivatives out there, but for someone just kind of an average Joe investor in the 1990s, they would never be using options contracts, certainly not in this kind of sophisticated way. So there's a lot to unpack. First of all, what is Wall Street Bets for people who don't know?
Okay, so Reddit is a social media forum. It was founded as the front page of the internet, and it was, for most of its history, really a less successful. So it was founded several months after Facebook, but financially for its two founders, who also started in a dorm room, it was a lot less successful at first because it's kind of hard to make money from it. It's basically, it provides a bunch of forums, and then a lot of those forums break into further forums where you can talk about stuff. You can talk about mental health. You can talk about cars. You can talk about a certain type of car. Then you can talk about repairing a certain type of car. So at any given time, there are about 100,000 of these subreddits that exist. And then people will be members of just one or maybe several. And then there's a front page of Reddit where the most popular posts go up. And unlike Twitter or Facebook or TikTok or whatever, it's a bit different. And this is why it's harder to make money from it, although they're succeeding now because they're about to do an initial public offering, is that you don't follow people. You follow a forum or an idea. And so anybody can go on there. So Demetri, you and I can be members of Wall Street Bets, which at the moment has about 10 million members, which is a lot. The beginning of my story had just broken through 1 million members. And I could go on there and I could write something crazy. Like, I just took out a second mortgage on my house. I put all my money into highly speculative derivatives on the stock, and I think it's going to go to the moon, buy, and not really explain. And you can go out there, Demetri, and you can have a more cerebral, nuanced take. I had bought the same stock. Say, I put 5% of my portfolio into this, and here are the 10 reasons why I think it's a good thing. And while yours is more nuanced, possibly more correct and more informative, my post is going to get upvoted. And upvoted is basically people on the site, and on this specific site to Wall Street Bets, where people are all about kind of doing, it's like the jackass of finance, basically. People are going to love my post and upvote it. And by upvoting it, they'll make it more visible. And yours will be ignored or possibly be downvoted because it's boring. So when a third person goes on to the forum, they're not going to see your post, or they might see it for a second. They're not following you, even though you wrote a smarter take. They're following the forum and they're going to see my take. And so if that third person is just, a young person who just opened their first brokerage account, of which there are about 10 million during the time the story is told, And they're turning to social media, as a majority of young people do. They don't go to some guy in a suit who's going to give them financial advice or help their parents. They might go onto Wall Street Bets. There's quite a good chance they did, or TikTok or some other social media. And they're going to see something wild and crazy. And they're going to think that doing wild and crazy stuff is normal. That's how you invest. You buy Dogecoin, you buy whatever, and you jump in and out of things, and you trade frequently. And so it set the tone for things. And what happened is that in the several months leading up to this, the advice that one got on social media, Wall Street Bets and other places, turned out to be exactly correct. And people like Warren Buffett turned out to be exactly wrong for the time being. Right. So,
David Portnoy's famous phrase, "I'm the captain now."
Right.
I can't wait to get into a conversation about that character. Remarkable.
Right. And so these social media influencers basically said, and they were right. I mean, you could laugh.
Stonks only go up.
Stonks only go up. And Warren Buffett, at the same time, Warren Buffett
washed up.
Right. He got out. This 91-year-old man, got out of airlines just at the times airlines. He just, how many times have I heard that just in the time that I've been working or writing about finance? Warren Buffett, while he's losing it, he just didn't get it. You always wind up eating your words when you say stuff like that. But that was what they were saying, and they looked right, because several things happen all at once, right? That kind of provided the ingredients for the story.
Well, let's hold on. Let's go. Yeah. You said this started back in 2019.
Yeah.
So also give me and my listeners a sense of that starting point as you describe the different things that had to come together, because that's also, I think, really relevant to the story.
Well, first of all, you had this long bull market period, right? So anybody who was, let's say, more speculatively inclined, every time there was a bad headline, I mean, it wasn't an uninterrupted bull run before COVID hit. There were a lot of 10% corrections, 5% corrections, scary things, scary headlines. The Fed is going to tighten, yada, yada, and people who bought the dip made money every single time. So there was this real sort of, the analogy that often people use is like picking up nickels in front of a bulldozer. It's moving slowly, and there's a bunch of change on the ground, and you can go and just scoop it up. It's there for the taking, and then every once in a while you're going to get your fingers crushed. But they never got their fingers crushed.
Right. And the bearish sentiment just got exhausted.
Totally, yeah. And this is years and years, right? So the Fed is always going to save you. BTFD, you go on, there's an official Wall Street Bets
Buy the fucking
store.
dip, BTFD.
Totally, yeah. And HODL, which is, hold on for dear life, which is has a whole different backstory to it, but HODL, which came from the crypto world. But it's applied to stocks as well. That you had that. Then in 2019, so you had Robinhood emerge. Robinhood got its start, it set up its service in 2015, got its start in 2013. Robinhood was an upstart broker that catered to this young generation. It was cool, it was hip, we're going to democratize finance. They were an app-first broker. They were an app with a brokerage attached, rather than all these other guys that were Schwab and Fidelity, that they could have paid a ton of money to their developers to make a really nice app, but it was a brokerage firm that had a nice, useful app where you could deposit a check and do all that stuff. Robinhood was slick and seamless. And most important, it was free. It wasn't really free, but they said no commission, zero commission. I spoke to one of their early investors who said, I looked at this app and it was so good. I said, guys, you should charge like $1 or $2 at least. And they said no. And they were right. And the investor was wrong, because charging zero kind of tripped a switch with people. And it's like an area of economics that I think somebody who studied economics a long time ago might not understand. Definitely even the heads of brokerage houses didn't understand, is that charging zero changes something in people's minds. You kind of cross a Rubicon. It changes behavior for certain types of things that are fun. You don't think of trading stocks as fun, and that's like the guys who run Schwab and Fidelity and E-Trade and Ameritrade didn't grasp this at first. They said 1 out of every 2 brokerage accounts in America has been opened on Robinhood. This can't continue. And okay, there are small accounts, young people with not a lot of money. We can't sell them a lot of things. We can't give them a credit card and things like that. But still, these guys are on fire and they're eating our lunch. And they threw in the towel in late 2019. And within a period of several weeks, they all went to $0 commissions. And this is from, commission. Once upon a time, you had to pay hundreds of dollars to trade stocks. This was, I look like my dad's old yellowed brokerage statements, and he was paying like a lot of money to trade stocks. when this happened, people were trading $5 or $6 a trade, which is a lot cheaper than it used to be. But when you go from 5 to 0, then something gets set off in people's minds. And you had an explosion in trading across the board so that these guys all made a lot more money. And what dirty little secret of the brokerage industry is that they make money when you trade. And Robinhood especially makes money when you trade. That's their whole business model. You got to trade a lot. Otherwise, they don't make money. Schwab can still make money if you're kind of passive because, you have a lot of money. They can sell you this and sell you that. And, you have a bank account and all this other stuff, but not Robinhood. Robinhood, trading is the name of the game. That's 80% of the money they made in the period that I describe.
Right.
And so that set the stage. And then you had the pandemic. And the pandemic, a lot of weird stuff happened, right? One thing that happened is young people especially had nothing to do. These are people who were very socially active. The unemployment rate for the 18 to 25-year-old cohort was double that of people my age. If they weren't already living with mom and dad, a lot of them were when the lockdowns or the quarantine started. They didn't have stuff to do. And in 2018, you had the legalization of sports gambling, which was done through smartphones. It was the one gambling activity that's way more popular with young people, young men especially, than older people. It's gambling on sports. And because of the Supreme Court decision, most young men in the country could gamble on their smartphones, and millions were doing it. And they were already doing daily fantasy sports. And all of a sudden, hey, sports went away. And there's this speculative activity they've been engaged in on their smartphones. And all of a sudden, the only game in town was this other thing called trading stocks. And it was even more exciting because the stock market plunged and then surged. And just to put it in context, the stock market history is very long, but this was unprecedented. You had the most rapid decline in 2020 from an all-time high to a bear market ever in U.S. stocks. And then you had the most rapid recovery to a new bull market ever by an order of magnitude. So the volatility was addictive. People were I spoke to young people who said it was like getting high, trading stocks. That's the language they used. It was like getting high. And
reinforced, of course, the BTFD mentality, buy the dip.
Totally. And so even people who had not been in it, that was the ethos, and the stuff that they bought were like cruise lines and airlines and, restaurant stocks, things that companies you were really worried about during the pandemic. And they came ripping back, too quickly, in the case of a lot of these, but that they were buying the stuff. And the ironic thing is they were kind of doing what in a kind of a twisted way, what you kind of should do when there's blood in the streets. So I don't totally fault them for that. I think that being a contrarian is a pretty profitable way of thinking. Although, they were buying bankrupt companies too, very poorly informed band of contrarians. They bought
Hertz.
Pumped $1 billion into Hertz, which is already bankrupt, and they said that they were going to be, they were worthless, and then they sold stock to these people. The SEC does not do a great job of protecting investors in this country. There's one case where they were late, but they stepped in after a bunch of stock was sold and said, hey, you can't sell worthless stock to these young people. Stop it, please. But a lot of other things went on during this time. And you had SPACs, and SPACs are hey, trust me, give us a bunch of money and we'll buy something, And then they go and buy a hydrogen garbage truck startup, that hadn't made a truck yet. And the truck only worked because the video was rolling downhill and they didn't tell anybody and stuff like that. So it was a kind of a golden age of kind of hucksters. And this young audience, they bought some good companies too. I don't want to make fun of anybody, but they bought some dumb stuff. And
sure.
So, and that's when I heard about this board,
right.
We were all kind of laughing about it at the Wall Street Journal.
So $0 commission trading, so basically free trading, the friction was reduced to being able to actually place a trade. Options also, we didn't talk about that, but actually we should probably discuss that now because I'd also like to ask you about the Robinhood trading platform and the app and how it was designed to be addictive in a way. And that kind of actually makes me want to ask you the question this way, which is, was it only a matter of time before the behavioral insights and engaging user experience of social media and the gamification of online gambling was ported over into the world of retail investing? Was that inevitable, do you think?
I think it was. And if you ask Robinhood they'll say no, they'll wrap themselves in sort of mom and apple pie and the First Amendment and whatever. And we're democratizing finance, and how dare you? You had Warren Buffett and Charlie Munger and other people, people with nothing to gain from criticizing them. They're only being altruistic, saying, this is like, you may as well go to the horse track, and they're getting these young people into gambling, speculative activity. And they say, you just trying to maintain the old order. No, that's BS. It's a business. They're not a charity. You want your business to be as successful as possible, and you want to make your app as effective as possible. And this is where Silicon Valley met Wall Street, right? They're in Silicon Valley, literally. And, they are two guys who come from that world. And it's difficult to tell if it's kind of willful naivete or not, but they gave the people more than enough rope to hang themselves financially. And one way they did that is making it very easy, very simple to get approved for options trading. And options, just to kind of summarize, an option is a financial instrument that if you're just buying it in your brokerage account, it is pure speculation. It's basically a lottery ticket. Apologies to anybody who speculates in options and has some very sophisticated strategy, strangles and straddles and butterflies and iron condors and whatever. There are all kinds of people who are really into it and claim to have an edge, but that's not what these people are doing. They're buying mainly call options, which is basically an agreement that say that a stock is at $100 and I want to buy the right from somebody to buy this stock at a higher price in the future, $110 in a month. Now, how likely is it that that stock's going to be $110 in a month? Not very likely. So you're going to sell me that right for, some pennies, right? But those pennies can be worth, $50 each if the stock goes up a ton unexpectedly. So basically it's a small outlay, and it's really more akin to betting on a sports game or betting on a horse that's going to, you put money on like the horse that, has like a kind of a sprained ankle and looks mangy and whatever, and you go to the horse track and you're like, okay, but he's like 100 to 1. I'm going to put money on that horse. And then it pays off. And it's more like that because there's a finite date where it pays off. So you can call buying a stock gambling, but you can keep holding a stock for forever, right? You don't have to sell it. But an option has an expiration date. And so these young people got really addicted to the lottery ticket-like element of these options because, especially during this very volatile time, the most volatile time ever in the stock market for bombed out stuff, you could buy options in something and then make an absolute killing, jackpot. And you can even sell the right before it expires to somebody else. So that right might become much more valuable even if it expires worthless.
Right. And just for listeners, I think this is important to note, the value of an options contract increases relative to the levels of implied volatility in the underlying asset and decreases the closer you get to the expiration date of the option. And what was so unique about this story was, one, that you had massive amounts of volatility, and people were buying options like right up to expiration that were like way out of the money. So you had insane levels of like lottery type returns for some of these folks. And how much did Keith Gill, because again, I want to bring it back. I want people to have a sense of this story because there are so many components and it's hard to know what members of our audience understand what. I mean, there's the Robinhood trading app, which has these sort of gamifying qualities. It takes a lot from social media and behavioral insights, zero commission trading, the legalization of gambling, people conditioned to buy the dip, etc. But I want to make sure that we kind of structure this story to understand it. So how much did Keith Gill walk away with at the end of the story?
Now it's difficult to calculate the value. So his net worth went from, at the beginning of the story, about 50 grand to at the crescendo about 50 million. So about 1,000, he made about 1,000 times his money.
But how much of those gains did he realize?
Approximately 30, but he put it into GameStop stock, so it's probably worth less now. He's fine. He's okay.
So anyway, he's a remarkable character. He's the character at the center of this story. I think one of the other things that's confusing about this story is that Keith Gill, the protagonist, shared two aliases. One was the alias that he had on Reddit, which is awesome. The alias Deep Fucking Value.
Yeah.
And he had the other alias, which was his alias on YouTube, where he had a show called Roaring Kitty, where he looked like he looked like John McEnroe. Like he had like a tennis bandana.
It looked like Wayne's World. He's in his basement. He's got the long hair and the bandana.
It's like Wayne beer. And McEnroe had a baby.
Totally.
So like you have this incredible protagonist. Then you've got the villains, right? Which are like Vladimir Tenev, who is the co-founder of Robinhood. You had the proprietor of Melvin Capital. You had Citadel. You had Ken Griffin at Citadel. You had all these different folks. You had the villains, the shorts, who were the villains. Then you had Dave Portnoy, who was kind of like a real-time live commentator of what was going on, right? He was like a narrator. He was one of many narrators. And then you had the billionaires. You had the Elon Musks and the Chamath populists, who were very much kind of like the Trumpian figures of this financial derivative universe. And I don't just mean derivative in terms of options. I mean derivative of the kind of culture war politics that we were seeing. And this, to me, this aspect is what's most interesting, right? It isn't necessarily the use of options contracts, which is kind of interesting. The fact that these retail investors use that they use social media to corral people into a trade like this, to burn people. But I think what you started this conversation talking about, which is what does this reveal about our society, is what I think is most interesting. So can you summarize for our listeners what the story is? Like what was the popular narrative, which you kind of touched on, which is kind of, it was this retail revolt of the public, sticking it to Wall Street, taking power back. And I do think there was some element to that because it was cathartic in a way to stick it to Wall Street, and the empowerment that came with getting together and doing something like that. But then also, like, what was the real story in your view?
So if you have no interest in finance, if you're interested in finance, I did have a number of people read the book who are active in finance, and they learned something. It wasn't dumbed down to the extent they didn't, because there were angles that they just had not looked at or thought about before. But if you're not interested or well-versed in finance, first of all, I explain the bits that need to be explained, but it's really a social story. That's the thing, is that, I think a misconception that I had going into this is like, it's, this time is never different. This time is always the same. Every generation, kind of comes in, wet behind the ears. And this is why bubbles happen. And this is why manias and panics and crashes happen. And I guess what I didn't appreciate enough is that this generation had a particular mindset. They had a particular set of likes and dislikes that needs to be acknowledged. First of all, if you are, let's say this is, 80% male group, primarily between the ages of 18 and 35. I would say that were the main players here. But I've met a lot of people who are middle-aged. I have neighbors my age who I mentioned. I wrote a book about this, and they were neck deep in it. So there are a lot of older people too. But their experience, this younger generation's experience, their first exposure to finance was the financial crisis, and they didn't themselves lose money or lose jobs because they weren't old enough. But their parents might have. Their parents might have lost their homes. There's this whole generation where they saw this boom ensue on Wall Street, and nobody, as they saw it, had been guilty of, crimes financially or wrongdoing, had paid, and they just got richer. And so they had a very, very dim view of Wall Street. This is the generation that did Occupy Wall Street. This is the, a generation that, for much the same reason, was not really interested in finance. Finance was not cool to be in. Like, if you were some really kind of real striver guy majoring in econ at the University of Michigan, whatever, and you wanted to go and be in the sort of, there are a lot of young people who want to work on Wall Street, but they're like a really narrow subset. Most people think Wall Street is dumb, or thought so, let's say, going on into this story, right? They were not interested in, even if they worked at a company where there was a 401k and saving money, they weren't very financially literate, and so on and so forth. Who do they think was cool though? They didn't hate all rich people because they thought that Elon Musk was the greatest thing ever. They thought people like Chamath Palihapitiya was the greatest thing ever. Dave Portnoy, who was this really popular figure in the sports betting world, who had never been involved in stocks, he rebranded himself as Davey Day Trader. And as we speak, he's got about 2.7 million Twitter followers. And he would do stuff like live on Twitter. He'd take a Scrabble bag and pull out letters until it made a ticker symbol, and then tell everybody to go buy it. And they would, and stuff like that. So it was like this really fun game these really cool guys were doing, and they were winning. And basically, if you pulled any ticker out of in April 2020, you pulled any ticker out of a bag, you were going to pick a winner. 96% of stocks went up. So you weren't going to pick a loser unless you were really unlucky. And that's what these guys were doing.
So let me ask you this, Spencer, as someone that's been, you've now, how many years have you been a journalist on Wall Street?
It's been 19 years.
19 years. So I think we've already established that you've never seen anything like this before. There's actually a great line in the book where you say that we often hear people say that this is unprecedented or that we've never seen this before. But really, we'd never seen this before, at least not this iteration of it.
No, and let me point out, I was an emerging markets analyst. Emerging markets is like a dog year. It's like because you see so many booms and busts. So I saw a lot of crazy stuff, a lot of crooks, a lot of craziness in emerging markets. And this takes the cake. This is off the charts.
Right. So what do you think that's about? The cultural part, right? Like, let's take David Portnoy. This guy was phenomenal. First of all, he was incredibly entertaining. I did a number of episodes on this story, one with Lily Francis, which is focused much more on the Wall Street bets angle, including the options trade. And then I did one with Tony Greer, where I think I started the episode with a clip from a video that he put out, or actually that someone else had put out of him with his head coming out of a jumbo jet. I should go back and listen to it. It was so good, that clip. Why is it that an entire generation of Americans, my generation and younger, millennials and Zoomers, have such little respect for Wall Street and for the stock market, outright disdain and scorn, such that they would call stocks stonks? They refer to the dollar as toilet paper and as traditional investing and as a scam. What do you think accounts for that?
I think it's a part of it is what, is the sort of the experiences that they had vicariously, right? I mean, through their parents suffering and the sort of the financial crisis being the kind of a real, vivid memory for a lot of them. But I think that part of it is kind of wise in a way, right? I mean, part of it is, I have young people who work with me or for me at the Wall Street Journal, and I think this is a really sharp generation. And I mean, people down into their 20s, and I'm so kind of impressed with them. I mean, I think they have a lot of, in my opinion, misconceptions, but they like the traditional sort of Wall Street BS. I think they have a pretty good nose for that. And there is a lot of BS, right? I mean, let's face it. Wall Street is very self-serving, and that's the context that I put this in. Is that
you think this was because they're? So here's what I'm trying to focus on: not the sort of intelligence of the retail trader involved in these trades. What I'm talking about is the kind of what I've described it as a kind of nihilism. To me, it feels extremely nihilistic. Having someone sit in front of a video camera, pulling Scrabble pieces out and creating tickers and betting on them. I mean, these are financial markets. Hertz literally came out of bankruptcy because of these long trades, and now they have commercials with Tom Brady saying, "Let's go." And that's a reference, I think, no one's told me this, but I assume it's a reference to the subreddits where people were saying, "Let's go," like let's pump the shit out of the stock. So, right. I mean, I think it's fun and funny, and it takes a level of intelligence, I guess, to corral, not a guess, certainly to corral the kinds of trades that we've seen. But I mean, I'm talking about that deeper nihilism. I mean, does that resonate with you? Do you find it to be nihilistic?
I do. I agree completely. It is nihilistic. Yeah, and calling stocks stonks is part of it. Like, you want to play in this game. You don't mind making money for sure, although you don't mind losing money either, right? I mean, that was kind of a surprising thing, is that a lot of these people they lose money, and it'd be like
it's a badge of honor. It's like, look at my leg, it's blown off. Isn't it cool? Can I get some upvotes?
Yeah, and there's this whole idea called loss porn on the subreddit, where people would just do dumb stuff and then post it. And there's a guy who was one of the early people on Wall Street Bets who kind of set the tone, where supposedly he faked this whole thing, but he went on and made this gigantic all or nothing bet. He would have made millions or lost all his money on options on Apple stock, and then live streamed it.
Yeah, it was the guy with the wolf mask.
The guy with the wolf mask.
Actually,
it's crazy. It's horrifying.
Yeah, it's a horrifying video. Actually, if you assume that that's real, it's horrifying. Yeah. But so much of this shit is straight out of Black Mirror.
It is. It totally is. It's hard for me to totally get. I tried.
Well, what is your best, again, because I think that we're all trying to figure this out, right? I just released an episode with Peter Pomerantsev, the author of Nothing is True and Everything is Possible, as well as This Is Not Propaganda. Not a financial episode, right? It's dealing with actually what happened in post-Soviet society, but it has implications for Western society. And I think same observations apply here.
Yeah.
Right?
They do, yeah.
And no one's an expert on this. So I'm curious, one of the reasons I brought you on the podcast is because you followed this, not just followed it, like you did a forensic level of journalism around it and you wrote a book on it. And I'm genuinely curious to understand what you think is going on here.
I think part of it is that and not to blame everything on him or whatever, but I'm going to bring his name into it, is Trump, the age of Trump, right? Where whatever you don't agree with is fake news, and everything is on social media is through this distorted prism where we're in tribes and we're like in these silos, and any evidence that you bring to bear about something, I mean, because there's some crazy conspiracies that have stemmed from this meme stock squeeze. So this meme stock thing, the GameStop mania, has not ended as we speak. It has continued to go on. It's morphed into whole communities that believe that there's going to be a crisis on Wall Street and they're going to be part of it. It's like a doomsday cult level stuff where they keep saying something's going to happen and then it doesn't happen, but they still believe. So I think part of it is this sort of this age where like anything can be true and nothing can be true, and things, and facts don't.
Well, so let me ask you this. I want to push back on something though, because it sounds like what you're saying is that when you mentioned the age of Trump, that somehow this general sentiment that it's all bullshit, nothing matters. That's actually another quote from the book, that LOL, nothing matters. That this sentiment, it sounds like you're saying it's not really justified. But what I would actually say is that the conspiracies actually emerged from in part from an abject and transparent failure of journalism as an institution. Like mainstream networks are basically propaganda outfits. They've always been in some ways, but they've become more obviously so and more ridiculous. And also their, hosts of different programs have themselves become characters in these stories through their social media accounts and through their public commentary. They participate in all of this. Do you not find that to be true?
I have to say, I'm going to push back on that. I mean, I'm 52 years old. I didn't speak English yet, and some of my earliest memories were watching Watergate, all the Watergate coverage with my mom and dad, who did speak English, although not that well, but they're like the news. I got to watch. I didn't even know what the news was. I got to watch the news, and I'd sit and watch the news, about Watergate and everything that was going on. And they liked CBS. They liked Walter Cronkite, so they would watch him. But if you turned, there were 3 networks and there was PBS. That's all you could get on TV. And you would get the same thing no matter what network you turned to. And you would get the same news no matter what local newspaper you read. And they were vastly more local newspapers then. So you got the news. There's this real strong ethos of objectivity that runs through journalism to this day. It's I run a financial analysis and opinion column. My columns and the columns of people who write for me can have opinion and analysis in them, but it's a really difficult hump to get over. When you bring someone across from the newsroom who's been a journalist their entire career and you tell them like, okay, instead of calling up the analyst or calling up the whatever and quoting the CEO, tell me what you think. What do you see with your own 2 eyes? And, of course we try to be, honest and whatever. We're not compensated based on what we write. We're not partisan at all. We don't delve into politics, but it's difficult to get somebody who's a journalist to break out of that mode. So I think the ethos of American journalism is still... But
do you think that's representative? The Wall Street Journal is a different publication, Spencer.
Yeah.
I like the Wall Street Journal. I read the Wall Street Journal in part because I rank it higher than most any other publication. But I'm also actually not talking so much about the written word. I'm talking about the vast forms of mass media that most people consume.
Yeah, totally. No, it's different. That's what I'm saying. It has changed. Exactly. Because if you turn on, and now, I think CNN used to be fairly objective, and I watch it and
CNN is a joke. CNN is a joke. I used to watch CNN and I don't watch it anymore. I don't watch any of these news channels because
I don't either, because it makes me sad to see it.
It's like fast food for your brain.
Well, you know what? If you're in the business of broadcast news, putting news in quotation marks there, then you have a crisis going on somewhere in the world. And once upon a time, you would have had a bureau, CBS would have had a bureau in Moscow and a bureau in Paris and a bureau wherever, and something was happening, or you had a stringer and you had somebody sending live shots or sending whatever. You know what? That's pretty expensive. Paying some guy to be there when something happens and to be interviewing people and kind of building the ground. It's a lot cheaper to have Sean Hannity or whatever, kind of shouting. That doesn't cost anything. You have to pay his salary and that's it. And a lot more people watch it. You have a very committed, engaged audience. My parents, I don't know if CBS, but they couldn't get the signal or something on the TV. They would have turned to ABC and I don't know, it was Peter Jennings by then or whoever. They would have turned to NBC and Tom Brokaw, or that would have been okay with them. Like they would have just gotten used to a new guy, but it would have been the same stuff. And that hardly exists anymore. So no, it's a complete, and social media is the same way. Social media has greatly amplified that sort of, where you get the news you want, and if you already have a point of view, you can have it reinforced as much as you want, even if your views are cuckoo crazy, So,
right, right. And that's the thing that's also interesting, right? Which is that the mainstay institutions that we used to turn to for consensus, to help us formulate consensus view of the world, have been discredited. But now you have all these independent, smaller voices who are equally, if not more, non-credible or whatever, coming up with all sorts of other crazy stories, and all sorts of people are available to be convinced of those various forms of reality. And so this kind of gets me to another question, which I wanted to ask you, which is that we live in an age today, it seems to me, where there is a narrative that has emerged, which is that it's all a narrative. The meta-narrative is that it's all a narrative. It's all bullshit. It's all about who can you convince and how many people can you convince of a particular story. And that's the only thing that matters for formulating reality. And so when it comes to the stock market, all of these are just symbols. All these are just tickers. They don't mean anything. The stocks don't yield dividends. There's no real tie back to the underlying fundamentals of the company. It's all about the story that we tell ourselves about what they're worth. And if you can convince enough people that XYZ stock is worth what I say it is, then it's worth that. And nothing else matters because LOL, nothing matters.
Yeah,
to bring it back to that sort of nihilism.
Totally. Nothing matters because this thing went up and these smart guys in suits went on TV and explained that this company doesn't have any sales or this product doesn't exist or whatever. Who cares? Nothing matters, right? And so in the short run, as I guess he's been quoted by Warren Buffett, because no one can find the actual quote, he said in the short run, the market is a voting machine. In the long run, it's a weighing machine. You can't make money in the long run on that. You can make money in the short run on that, because if you happen to be early in the chain, or if you happen to be a total cynic, but if you can convince a bunch of fools to be the greater fool and buy something at a higher price, then you made money. And you can make a lot of money a lot more quickly than you can other ways in the stock market. Some of the people who were involved here already are pretty rich and didn't have anything obvious to gain. So Dave Portnoy, it's difficult to say, but I mean, you have to understand, people say, why would they be doing this? It's because attention is currency too. In the world of social media, attention is the currency. And if they can go in there, I mean, I don't want to give away the plot for people who didn't follow the story blow by blow, but Elon Musk makes a very significant appearance in the middle of this story that cost some people billions of dollars, just for fun, just for giggles. He wasn't personally invested in it. He just wanted to kind of stir the pot, and boy did he, and it's kind of crazy. You think about what kind of world do we live in? I mean, and who did it cost money, right? Did it cost me money? I mean, I don't invest in stocks because of my job, but even if I
that would
did,
make you different than the Federal Reserve Board and Congress.
That's right. Yeah, that's right. I think it's not very ethical for me to be. So I just own mutual funds and things like that. I don't, have leverage on my account. But there were people in the markets who had a lot of leverage, who were very, to get into Talebism, there's fragile and anti-fragile and whatever. And, and they were not resilient enough to something that was highly unexpected, to this kind of black swan event. And they wound up almost going bankrupt, or in some cases going bankrupt and shutting down their businesses, because who in the world could imagine this thing happening? And part of it was just people having fun. Some of the people didn't even care if they made money. They said, I don't care if I lose money. I hope I lose money on this. I just want to be part of it, which is what I saw that morning when I emailed the editors at Penguin Random House that this is something totally different. When did people jump into the stock market, open millions of accounts, and not care if they made money?
Yeah. So Spencer, look, I really appreciate you coming on the podcast. It's a fascinating story, a very interesting book. You do a great job of breaking it down in the book. I mean, someone can actually read your book pretty quickly because you do such a good job of having a lot of subchapters in the book and all the different characters are laid out. And for anyone that doesn't know anything about the story or who followed the story but wants to understand it in more detail, I think your book does a really good job of explaining that. And to the point that I was trying to make, which is that I think this is one more piece of data in what I think is a larger phenomenon in society that I've described as a kind of nihilism that my recent guest Peter said was just less nihilism because he thinks of it in ideological terms and more just where people genuinely don't believe in anything, a breakdown in belief systems. And I think in those types of situations, things that were considered impossible, a stock like GameStop, in the course of a day, what were the biggest highs it made in percentage terms?
So GameStop went from, in the spring of 2020, $2.17 a share at its low. So it was a marginal company. Nobody cared about GameStop. It's a tiny, tiny company, like a flea on a mouse, to being worth $483 a share and being the most traded security in the world.
Yeah, no, that is just amazing, man. And I actually, when I was reading your book, and I don't necessarily want to, well, we could talk about it now, I suppose. I didn't fully agree. I mean, I kind of agree with you about your overall view, which is that, I certainly would not disagree that historically people are way better off investing in cheap index funds than trying to speculate in the market. So I don't disagree with the substance of that argument. But I guess I kind of disagree with what I felt was like kind of the tenor of the argument, which is that I feel like the rules have changed. The system has become so manifestly corrupt, and it's become so difficult to grow wealth at a time when, or at least relatively speaking, right? Because asset prices have appreciated so much, and so much of what is important in life that isn't measured as part of the CPI has gone way out of reach for people. Right. And so I kind of understand the argument that, a 2x of my portfolio over 10 years doesn't move the needle for me. 3x on my portfolio doesn't move the needle for me. It's not going to really do much for me. It's not going to change my life experientially in the way that I feel like it matters based on not just the extension of asset prices, but the world I live in today, social media, et cetera. And so I kind of understand that. And I just think our markets are so broken. Our regulators have been so derelict, and the Fed and central banks and the outstanding liabilities, which the Fed has been monetizing over the course of many years, and this kind of dynamic that we're stuck in has changed the game. So I just don't know how much fundamentals really matter anymore, man. Especially when these stocks don't pay dividends. It's not like I can buy this stock and I can get a cash flow, right?
You can't get one from GameStop. I'm going to...
Or from Hertz.
Let me tell you, or from Hertz, right? Yeah. Well, maybe you get like
Let's go. Let's
you
just
can buy,
go,
you can buy
though,
AMC has a big role here to AMC. You get like free bucket of popcorn if you're a shareholder one time.
Right.
Look, the thing is, we are in the waning period. I'm convinced we just saw the top of a major financial bubble, one of the major financial bubbles of our lifetimes. So is it a good time to just invest generally, broadly in stocks at the top of a financial bubble? Well, what alternative do you have? Because look, the people in the story, the young people in the story, I see three things happening to them, and not all in equal proportions. I see some of them saying, man, that was dumb. I need to get serious. I'm just going to basically, I read this book or read this column or I'm just going to find a robo-advisor who does this stuff for me cheaply. I'm not going to I understand that I'm not able to outsmart the market because almost nobody is. And I'm going to invest passively. And their returns will be subdued for a while because we're at the tail end of this bubble. So asset prices are high. It doesn't mean that they won't make money. It just means they need to temper their expectations. Even if you had invested at the tops of major bubbles and invested your paycheck steadily, you would have done just fine. You just would have done less fine than at other times. Okay. The asset values are not just generally of equities are not to the point where you can't make money over decades, which is the kind of time span that you need to be thinking about. So I don't agree that there's no reason to invest. It's just, and the system is corrupt and the system is whatever, but stocks, there's no way to multiply your money.
If I'm being honest, I don't think it's investing. I don't think what people are doing today, whether they're putting their money in index funds or in the stock market, is really investing. I don't even think the stock market anymore, you can think of it as people thought about it 20 or 30 years ago. I think it's now become a political liability. It's sort of supplanted the people's FDIC insured bank accounts as the place where they save for retirement. And so I think there's a different set of dynamics.
But that's the crazy system that we live in. That's America especially. And it's so messed up, right? Is that Social Security is a joke and the social welfare system is a joke. And hey, you're on your own. But here's a IRA is a law complicated law that allows you to put money into an IRA or 401k. Maybe half of people can put money in a 401k. Lots of luck, right? It's dumb. It's dumb that people are left to their own devices because you know what? We as humans are very, very poorly wired to save and to invest. Okay, so that's dumb, but that's the system we have. Okay, so some minority of the young people who got involved in this will snap out of it and do the right thing. And a really small minority, I'm afraid. Some minority of young people, it's going to cost them even more money. You know why? Because they're going to say this whole thing is corrupt and rigged and the stock market is a joke. And they're going to be like people, think about people in 1929 who sort of, all these millions of Americans who got into the stock market on margin and got wiped out and lost everything. Stocks were like a 4-letter word, in the 1930s. They never again in their lives invested in the stock market. Do you think investing in the stock market in 1932 or 1933 was a good idea? Yeah, absolutely. It was a good idea. That whole generation basically wouldn't touch stocks at a time when, even though you had World War II, the most deadly conflict, ever in history and all this horrible stuff happening, you still made a lot of money over time. So a lot of these young people are going to be like, this is for different reasons, not because of the trauma of a loss, but because they see the whole thing as being rigged.
Right. That's so interesting, though. But here's the thing. Here's what I would want to ask you, Spencer. I think 1929 was 2008. I think the difference is that in 1929, if you got burned in the stock market, you could put your money in a bank. Well, actually, the banks went bankrupt. But I guess my point is you could put it under the mattress. The money had value. People have lost faith in the currency now. So like the reaction to 2008 was eventually to basically treat the stock market as a scam casino. Yeah. I don't disagree with you. I think we're on the same page, but we're approaching this maybe from a slightly different perspective. And you might be right, but I don't know.
I mean, Demetri, I think that's how people did view it. So I do agree with you. That's how people viewed it. That's why they're so cynical about it. And they're like, well, I may as well. But, it's like, what if you're like a cab driver in Vegas? You're like a real blue collar guy and you're saving money and you're putting it away. And maybe one day, if I'm really lucky and I play my cards right and I, brown bag my lunch, I'll be able to retire. Or I could walk into Harrah's and gamble it away and, one roll of the roulette wheel. Well, you know what? Your odds are not too good if you do that.
But so if you don't trust the long-term value of the money, right? It seems to me that really, and I think that you would probably agree with this based on what you've said, this is a policy failure. And capital should not be so much more valuable than labor. That's one example. Like someone who's working every single day to earn a living shouldn't have to depend on the good graces of the stock market and the regulators working together to multiply the value of his or her retirement portfolio so that he or she doesn't end up destitute at a later stage in life.
I agree 100%. It should not be, but it is. That's the world we live in, and that plays a role. And there's Demetri. There's a whole chapter about race to the bottom. That goes into free money, and that contributed to this whole mess and this whole sense. And so, when money is becoming worthless and there's nothing you can do with money itself, with the digital dollars or the physical dollars or whatever they are, then it becomes much more attractive to bet on a long shot.
Yeah.
That's the environment that created SPACs and created all this stuff. I'm quite confident, though, that obviously there are going to be people who said, no, loser, I made a lot of money buying this stuff and I bought whatever and I got out. Haha. Of course, somebody's always made money. I get like so much hate mail, like when I write about kind of, chide people for doing some tell them not to do something speculative and they say they already made a lot of money in it. Great, good for you. But you can't all do it. It's like not, there has to be like some bag holder at the end of it who didn't make money. That's who I'm writing this for.
You're right. That should be the, what is it? At the beginning of a book where you have not attribution. What is it? Where you write like this book is for, you could say this book is for the bag holders. That'll work really well with your very first sentence
exactly.
about your sons being degenerates.
Yeah, exactly. Yeah, it's about my sons' degenerates. You can read all the sordid tale of my sons. But yeah, I mean, I get you that it's a dumb, corrupt system. It's people, and this book is really all about people getting rich. But then you had these people who thought that they were sticking it to the man and thought they were righting the wrongs, and they were like Robinhood, and they were like, Robinhood was not Robinhood. Robinhood and its ilk were not Robinhood. Robinhood, they're billionaires, and their clients are just spinning their wheels and wasting their money and wasting their time for the most part. So it's a stupid system that we're in, and people are very easy to manipulate, and the people at Robinhood will deny it. But if you look at their app, it is suspiciously similar to gambling apps, which are designed by people who know about social psychology, and they know about intermittent rewards, and they understand all these things. And so you can say that, like, I love studying financial bubbles. I'm fascinated by it and like why people do it. And after the fact, and you speak to people and you look at newspaper articles during it, look at newspaper articles from last year, all the dumb stuff that people bought, and I think human psychology doesn't change. It was, forged over eons, when we were hunter-gatherers. But I think that these companies did change. They got a lot better at understanding what buttons to push, right? And, they are, whether it's your Facebook feed or whatever, or the broker that you use, they understand how to push your buttons and get you to do what they want to do, which is to share pictures of yourself and buy stuff and trade a lot and feel FOMO. Robinhood investors check their accounts 8 times a day. What the hell, right? Mm-hmm. I mean, we know that frequency of checking your account and frequency of trading is inversely correlated with returns. They're not looking out for their customers' best interests.
Probably intelligence too.
Well, I guess I don't think.
I think
the
all
people
this stuff
is.
Yeah. Well, my point is, I'm just suggesting that this technology is making all of us stupider. That the way that we're interacting, the amount of time that we're spending online, the way that these applications are designed, they're not making us more intelligent. They're making us like addicts.
Totally.
And addicts don't have as much agency and attention span to focus on trying to, better themselves. Robinhood isn't designed to make you a more thoughtful investor. It's designed to make you trade more.
Totally. Yeah.
And in some sense to, I guess, probably to lose a lot of money. So anyway, Spencer, thank you so much for coming on the podcast. Great book. People will be able to find it, of course. It used to be, you'd say, I guess in the old days, you would tell people they can go to this bookstore or that bookstore. Today, everyone knows they just go straight to Amazon. This is the world we live in, and they can order the book. So I wish you the best of luck with it, and thank you for coming on the podcast.
Thanks so much for having me.
For more information about this week's episode, or if you want easy access to related programming, visit our website at hiddenforces.io and subscribe to our free email list. If you want access to full episodes, transcripts, and intelligence reports, which include additional notes, resources, links, and other material that will help you get the most out of each and every episode, check out our premium subscription, available through the Hidden Forces website at hiddenforces.io. Today's episode was produced by me and edited by Stylianos Nicolaou. For more episodes, you can check out our website at hiddenforces.io. Join the conversation at Facebook, Twitter, and Instagram at Hidden Forces Pod, or send me an email at dk@hiddenforces.io. As always, thanks for listening. We'll see you next week.